You see Bitcoin starting to break out. The setup is perfect. It matches your strategy to a T. You move your mouse over the buy button, but you hesitate. Your stomach churns. What if this is a fake out? What if it dumps the second you get in? You freeze. The price rips higher without you, or worse, you chase it late, buying the top right before it crashes back down. That hesitation, that chase, that feeling in your gut, that's not a strategy problem, that's a psychology problem. And in the brutal, volatile world of crypto, it's the single biggest thing holding most traders back from consistent profits. You're charting your skills, your knowledge of indicators, your brilliant strategy. That's only half the battle. The other half is found right here, inside your own head. Today, we're going to give you the weapon to win that inner battle. Think of it this way. Your trading strategy is a high-performance supercar. It's got the power to get you to your financial goals. But your trading mindset, that's the driver. And if the driver is panicked, impulsive, or drunk on greed, they are going to crash that supercar, no matter how powerful it is. A focused, disciplined driver, however, can navigate any road. A winning mindset in crypto trading isn't about having no emotions. It's about not letting your emotions drive the car. It's built on a few key pillars. Master these and you'll leave 90% of other traders in the dust. First, unshakable discipline. This is your superpower to follow your own rules. When your plan says sell at a 10% loss, you sell. You don't hope. You don't pray for a bounce. You execute. When your plan says takes profits on Ethereum at 3,500, you take profits. You don't get greedy hoping for 4,000, only to watch it crash back to your entry. Discipline is doing what you plan to do, not what you feel like doing in the moment. Second, radical patience. Crypto never sleeps, which creates a dangerous urge to always be doing something. Patience is the strength to wait. A+ setup that fits your strategy perfectly. Instead of forcing a trade on some random altcoins out of boredom, trading is a game of waiting for the fat pitches. Most of the time, your job is simply to sit on your hands. Third, think cold objectivity. This means seeing the market for what it is, not what you want it to be. Did you just buy a ton of Solana? Objectively means you still pay attention to bearish signs. Instead of only looking for news that confirms your decision, you have to detach your ego. A losing trade doesn't make you a bad person. It's a business expense, a data point, nothing more. And that leads to mental resilience. You will have losses. You will have days where the entire market is a sea of red. Resilience is the ability to take that punch, learn from it, and execute your next trade without fear or anger. It's the skill of preventing one bad trade from turning into a revenge trading disaster that blows up your account. Finally, and most importantly, is deep self-awareness. This is the foundation for everything. It's the ability to recognize in real time what's going on in your head, to be able to say, wow, I'm feeling really greedy right now, or I'm terrified of losing money on this trade. You can't manage an emotion if you don't realize you're feeling it. Now that all sounds great, but how do you actually build these skills? You can't just wish for more discipline. You have to train it. Just like you'd go to a gym to build your muscles, you need a gym for your mind. And for a trader, that gym is your trading journal. And I'm not talking about a simple spreadsheet with your entry, exit, and profit or loss. A psychological trading journal is the most powerful tool for building a bulletproof mindset. It's how you go from being an emotional amateur to a disciplined professional. Here's how you turn your journal into a mindset gym. It's a simple 3-step process. Step 1, the pre-trade protocol. Before you even think about placing a trade, you open your journal and you write down your state of mind. On a scale of 1 to 5, how disciplined do you feel? How patient? You write it down. You identify the psychological risks before you enter the market. Step 2, the in-trade note. This is optional but powerful for longer trades. If you're holding a swing trade in Cardano for a few days and you feel a massive urge to close it out of fear, make a quick note. Price pulled back, intense fear, resisted, urge to close. Documenting the feeling helps you master it. Step 3, the post-trade debrief. This is the most important part. After you close a trade, win or lose, you immediately go back to your journal. First, log your emotions: relief, regret, anger, satisfaction. Be brutally honest. Then assess your performance. Did you follow your plan? Where did your discipline slip? What emotion caused you to deviate? You write down the lesson. For example, lesson: when the market is slow, my impatience goes up. Next time, I will take a 5-minute break instead of forcing a trade. Doing this for every single trade creates a feedback loop. You start to see your patterns. You'll discover your specific triggers. You'll notice the gap between what you intend to do and what you actually do. And slowly but surely, you will close that gap. You can do this with a physical notebook or a simple document. But if you want to supercharge this process, modern AI-powered journaling tools can connect your mindset directly to your result. A platform like Vibe Trader, for example, which I'm launching very soon, it lets you easily log all this psychological data. Then its AI can scan your journal and give you incredible insights. It might find a pattern like your win rate increases by 30% on days you rate your pre-trade focus as a 5 out of 5, or trades you tag as FOMO have an average loss that is double your normal risk. Seeing that hard data makes the need for discipline real. It's not just a feeling anymore. It's a statistic that is directly impacting your account balance. Look, you can have the best crypto trading strategy in the world, but if you don't master your mind, you will fail. Your psychology is the final boss. Your challenge, starting today, is to begin your own mindset journal. Don't just track your profits and losses, track your thoughts and emotions. It is the single most effective thing you can do to become a consistently profitable trader. What's the biggest psychological challenge you face in your trading? Is it fear, greed, FOMO? Let me know in the comments below. Let's talk about it. Thanks for watching, and I'll see you in the next one.